Anand, a much awaited policy, and we're already seeing how the markets are processing this. A little worried with some of the takeaways. What to you stood out? Was it worrying to hear the forecast on growth?
Big surprises, Abha. If you
Mm.
see the very hawkish statement, from the governor, and if you see the real GDP, projection,
Yeah.
moving down from 7.8% to now, 7.2%. That's a big, downward revision in the real GDP. Inflation, again, last year, in the last February policy, they projected 4.5% for the entire 22-23, and now
Mm.
it's 5.7. Again, a huge jump on the inflation forecast. So I see these two, this downward revision in the GDP and upward revision in inflation as two big concerns, for the economy.
So, what does this mean, first of all, for monetary policy trajectory, Anand, going forward? Because as of now, they've not made any major moves, but given the kind of commentary we're seeing this time, they could be sort of compelled to move sooner rather than later. In fact, were you surprised it didn't already?
Yeah, it still looks like they are preparing for the market. Preparing the market, for a rate hike. If you see, they have now introduced the SDF, this standing deposit facility, where the corridor for the repo, which is 4%, and if you see, for this SDF, it is 3.75%. Now, this was the corridor even during pre-pandemic for repo and the reverse repo. Okay, though they have not touched the reverse repo, the corridor is still 65 basis point. But they have introduced this SDF here, where bank can, if RBI is absorbing the liquidity, banks don't have to give any, RBI doesn't have to give any collateral. So in that sense, they have they have gone back to the pre-pandemic level of corridor. So, I think they are preparing the market for a rate hike in the near future. This is my.
Got it. So that's clearly the strategy that's coming into place here. What are the major concerns, Anand, according to them, when they're highlighting, why they're being a little hawkish? Would it be the outcome of the war, spiking crude? What are some of the major factors at play that markets are also closely eyeing now going forward?
See, clearly it's crude. If you see the February forecast of 4.5% inflation for the entire year and now 5.7%, clearly it's the crude. And we have seen the crude prices have jumped big time, in the last 1 month. And we have seen the reaction on the domestic, petrol and diesel prices. Eventually you are going to see higher food prices and other goods and services in the economy. So crude is, one big, concern. Second, even on the currency side, Abha, if you see, we have seen a huge outflow of dollar from the stock market and from other sources, in the last 6-7 months, because globally, the interest rates are rising, and the reaction of that, we have seen in the currency. So our currency has also depreciated, in the last 2-3 months. So there's a threat of imported inflation. Number two, assuming the prices remain the same, but the rupee depreciate, you'll have a higher lending cost in India. Okay. So second, there's a threat of imported inflation, which I see. And third, the economy is also opening up. I'm sure there's a lot of pent-up demand, and that will also result in some sort of a price increases. So they have concern from multiple front on the inflation side.
And I think what the market's also reacting to is the timing of this, right? They're kind of being forced into a corner because of inflation, while they're clearly anticipating that growth is going to be hit. So while they're still sitting on the fence, they're clearly indicating that this is going to happen sooner rather than later. And is this the best time to do it? That's what the market's going to say.
Abba, if you see the last 1 year or maybe the last 6-7 months, we have seen inflation coming back, globally. And RBI was resisting that move. And even Fed policy, if you see, even I was surprised when I saw 4.5% CPI figure. So RBI has a target of and of 2 to 6%. But 4.5% inflation when the crude was going up, when globally central bankers were raising rate. So my sense is that RBI has accommodated the market for long, to support the growth. But now there's a situation where we are seeing crude jumping big time. We are seeing currency depreciating. So the options are limited up. Now they have to act. And in a way, they are preparing the market for a rate hike in the near future.
Got it. All right, Anand. Thank you.
If you like the video, do like, comment, share and subscribe.